As the world anticipates President-elect Donald Trump's inauguration next week, concerns are mounting over his proposed tariff policies and their potential impact on global trade. Trump has signaled intentions to impose substantial tariffs, including up to 60% on Chinese imports and 10% to 20% on goods from other nations, aiming to reduce the U.S. trade deficit and encourage domestic production. European leaders, including French President Emmanuel Macron, have expressed apprehension about the potential for a trade war with the U.S. Macron warned that the U.S. might continue to protect its interests at the risk of dismantling value chains between Europeans and Americans. In response, the European Union is considering adopting a more assertive trade policy, exemplified by recent tariffs on Chinese electric vehicles. Japanese companies with operations in the U.S. are preparing for possible additional tariffs under the incoming Trump administration. Measures include strengthening manufacturing and procurement within the U.S. and contemplating price increases for products. A survey indicated that a majority of these companies anticipate negative effects from the proposed tariffs. Despite previous tariffs, China's dominance in global manufacturing has continued to rise, posting a near $1 trillion trade surplus in 2024. However, the prospect of new U.S. tariffs threatens to escalate tensions and disrupt existing trade dynamics. China has been actively seeking to reduce its reliance on the US dollar in international trade, a process known as dollarization. The Russia-Iran treaty stands in contrast to the broader global trend of nations bracing for potential US tariffs. While countries like those in the EU and Japan are strategizing to mitigate the impact of anticipated US trade policies, Russia and Iran are proactively strengthening bilateral ties and reducing dependence on the US dollar. This move aligns with broader efforts among BRICS nations to explore alternatives to the dollar in international trade. President-elect Trump's warnings to impose 100% tariffs on countries that move away from the US dollar add another layer of complexity to the evolving geopolitical landscape. The Russia-Iran partnership may test the incoming administration's approach to international alliances and economic policies. As these dynamics unfold, the global community remains watchful, preparing to adapt to the shifting paradigms of trade and diplomatic relations. Amid these developments, Russian President Vladimir Putin and Iranian President Masoud Pezeshkian signed a comprehensive 20-year strategic partnership treaty in Moscow on January 17, 2025. This agreement aims to deepen cooperation in areas such as defense, energy, and trade. Notably, the treaty includes plans to facilitate trade using their national currencies, effectively moving towards dollarization between the two nations. Before diving into the details of the treaty, it is essential to examine the collective approach taken by BRICS countries to counter the dominance of the US dollar. The BRICS nations have been at the forefront of efforts to reduce their reliance on the US dollar in international trade and finance. This move toward dollarization stems from a shared desire to counterbalance the dominance of the dollar in global markets, which has historically given the United States significant leverage over other nations. The BRICS nations are also motivated by a collective ambition to create a more equitable global financial order free from the geopolitical pressures exerted by the current dollar-centric system. Recent geopolitical developments, such as sanctions against Russia and China's growing economic rivalry with the US, have further accelerated these efforts. One of the most notable steps toward dollarization by BRICS was the creation of the New Development Bank, NDB, in 2014. The NDB was established with the explicit goal of providing financial resources for infrastructure and sustainable development projects in member states and other emerging economies. Unlike traditional institutions like the International Monetary Fund or the World Bank, the NDB emphasizes local currency financing. This approach reduces dependence on the dollar and shields member economies from exchange rate fluctuations. With an annual authorized lending capacity of $34 billion, the NDB has supported numerous projects while promoting financial independence, such as infrastructure development in its member states. Brazil and renewable energy initiatives in India have been partially funded through non-dollar mechanisms. Such efforts underscore the role of the NDB as a critical pillar in BRICS' strategy to reshape global financial norms. The shift away from dollar-denominated transactions is one of the clearest manifestations of the de-dollarization agenda. According to data from the Bank for International Settlements, the share of cross-border lending by BRICS residents denominated in US dollars declined from 67% in 2016 to 55% by early 2024. This trend reflects a deliberate effort by member nations to diversify their financial instruments and trade settlements. Moreover, the issuance of international debt securities by BRICS countries in dollars has similarly decreased from 83% to 75% over the same period. This gradual decline highlights the bloc's commitment to reducing its exposure to dollar-related risks, particularly those stemming from U.S. monetary policy and sanctions. BRICS nations have actively pursued bilateral agreements to conduct trade in their respective local currencies, further diminishing the need for the US dollar. For instance, in March 2023, China and Brazil agreed to settle all trade transactions using their national currencies, the Chinese yuan and the Brazilian real. This move was aimed at fostering financial stability and deepening economic ties between the two countries. In November 2010, China and Russia agreed to utilize their national currencies, the yuan and the ruble, for bilateral trade, moving away from the US dollar. This initiative was designed to strengthen economic ties and protect their economies during the financial crisis of 2007–2008. By December 2023, over 90% of trade between China and Russia was conducted in their respective currencies, reflecting a significant shift towards de-dollarization. India and Russia, to circumvent Western sanctions, have tried using the Indian rupee for trade following Russia's increased oil exports to India since the Ukraine conflict. Approximately 90% of their bilateral trade is now settled in rupees and rubles. This arrangement has led to Russia accumulating substantial rupee reserves, which are being invested in Indian assets. China has promoted the use of its currency through bilateral currency swap agreements, as seen in its trade with Ethiopia. This approach includes barter trade models that bypass traditional currencies by exchanging goods for local currencies, thereby reducing reliance on the US dollar. Beyond bilateral efforts, the BRICS bloc has explored the possibility of creating a unified currency to facilitate intra-bloc trade and investment. While this proposal remains in its infancy, it has sparked significant debate and interest. A unified currency could serve as a direct alternative to the US dollar, symbolizing the bloc's collective economic strength. However, this initiative faces practical challenges, including disparities in the economic size and stability of member nations and the complexities of creating a central monetary authority for the bloc. BRICS Pay is a proposed blockchain-based payment system designed to facilitate seamless cross-border transactions among BRICS countries. Its primary objective is to bypass traditional financial infrastructures dominated by the US dollar and Western institutions, thereby promoting financial independence within the bloc. By leveraging blockchain technology, BRICS Pay aims to provide a secure, transparent, and efficient platform for member nations to conduct trade and investment activities. The development of BRICS Pay signifies a strategic move towards de-dollarization, enabling member countries to conduct transactions in their local currencies. This system is expected to reduce transaction costs, mitigate exchange rate risks, and enhance economic cooperation among BRICS nations. Additionally, by creating an alternative to the SWIFT system, BRICS Pay seeks to insulate member countries from potential sanctions and financial pressures exerted through Western-controlled financial networks. During the 2024 BRICS summit held in Kazan, Russia, member nations explored the potential adoption of cryptocurrencies and blockchain technology to support de-dollarization efforts. Leaders discussed the implementation of central bank digital currencies, CBDCs, and blockchain-based platforms to facilitate trade and reduce reliance on the US dollar. Russian, Chinese, and Iranian leaders strongly advocated for the development of new financial systems leveraging digital currencies to establish a more resilient and independent economic framework. The integration of cryptocurrencies into BRICS financial strategies signifies a shift toward embracing digital finance. By adopting blockchain technology and digital currencies, BRICS nations aim to enhance transparency, security, and efficiency in trade transactions. These initiatives reflect a broader movement to utilize technological advancements in establishing a multipolar global financial order less vulnerable to unilateral economic policies. On January 17, 2025, Russian President Vladimir Putin and Iranian President Ebrahim Raisi signed a comprehensive strategic partnership treaty in Moscow, marking a significant milestone in bilateral relations. The treaty covers key areas such as security and defense cooperation, including joint military exercises and intelligence sharing to counter mutual threats. Both nations committed to resolving disputes in alignment with the UN Charter and international law while preventing their territories from being used to support separatist movements against one another. In energy collaboration, Russia and Iran agreed to promote cooperation between their energy companies, invest in developing oil and gas fields, and undertake long-term projects on the peaceful use of nuclear energy, including constructing nuclear power stations. The treaty also includes the creation of a modern payment system independent of third countries, encouraging the use of national currencies to facilitate smoother trade and economic transactions. This 20-year treaty signifies a deepening alliance between Russia and Iran, especially under the shared pressure of Western sanctions. Both nations have faced restrictions on their vital energy industries and aim to strengthen their partnership to mitigate these challenges. The agreement comes amidst shifting geopolitical dynamics, with both nations seeking to bolster their positions on the global stage. Enhanced cooperation is expected to have significant implications for regional security and international relations. The trade relationship between Russia and Iran has evolved significantly over the centuries, marked by periods of cooperation and conflict. Diplomatic ties date back to the 16th century during the Safavid era, with interactions shaped by territorial conflicts, alliances, and complex geopolitical maneuvering. The 19th century saw heightened tensions as the Russian Empire expanded southward, leading to wars and treaties like the Treaty of Gulistan (1813) and the Treaty of Turkmenchay (1828), both heavily favoring Russia. In the 20th century, the geopolitical landscape shifted dramatically, particularly after the 1979 Iranian Revolution. While the Soviet Union initially approached the revolution cautiously, both nations recognized shared interests in countering U.S. influence in the region. The dissolution of the Soviet Union in 1991 created new opportunities for economic and strategic collaboration, gradually improving relations between the two nations. During the 1990s, trade between Russia and Iran remained modest due to economic challenges. Russia grappled with transitioning from a planned to a market-based economy, while Iran faced international isolation over its nuclear program and alleged support for terrorism. Despite these challenges, the two nations identified common interests, particularly in the energy sector. The early 2000s marked a turning point as bilateral trade expanded. Russia became a key supplier of military equipment to Iran, including advanced missile systems, highlighting the growing economic and strategic partnership between the two nations. The S-300 deal signified a key aspect of collaboration between the two countries. Simultaneously, both nations worked on developing Iran's energy infrastructure, including the construction of the Bushehr nuclear power plant. This project, initiated in the 1990s, was completed with Russian assistance in 2011. By the mid-2000s, trade volumes between Russia and Iran reached approximately $1.6 billion annually, driven by energy, military cooperation, and industrial equipment. While these figures were relatively modest compared to Iran's trade with China or the European Union, they reflected a deepening partnership. The imposition of international sanctions on Iran between 2010 and 2015, primarily due to its nuclear program, led to a sharp decline in trade with Russia, falling by 65%. Russia faced pressure from Western nations to limit its engagement with Iran, resulting in a cautious approach during this period. However, the signing of the Joint Comprehensive Plan of Action (JCPOA) in 2015, which lifted certain sanctions, provided a significant boost to Iran's economy and its trade relationships. By 2017, bilateral trade between Russia and Iran rebounded, reaching $1.7 billion. Key exports included Russian machinery, agricultural products, and metals, while Iran exported agricultural goods and petrochemicals. The re-imposition of U.S. sanctions on Iran in 2018 under the Trump administration once again disrupted trade. However, Russia and Iran increasingly sought ways to bypass sanctions, including barter trade and transactions in local currencies. These efforts laid the groundwork for a more resilient partnership in the face of external pressures. The International North-South Transport Corridor (INSTC) has emerged as a cornerstone of the Russia-Iran trade relationship. This multimodal transport network, involving rail, road, and sea routes, aims to reduce transit times and costs for goods traveling between Russia, Iran, and India. The corridor is expected to increase trade volumes significantly, with potential annual savings of 30 to 40% in shipping costs. In addition to the INSTC, Russia has invested in upgrading Iranian ports and logistics facilities to enhance trade efficiency. The Rasht-Astara Railway, in particular, has received significant attention, with Russia committing substantial resources to expedite its completion. This project aligns with Moscow's broader strategy to diversify its trade routes and reduce dependence on European markets. The relationship between BRICS nations and the United States remains highly uncertain, particularly in light of heightened tensions following Donald Trump's re-election. While his administration's stance on BRICS as a bloc is unclear, his approach to individual member nations introduces complexity. Trump has signaled a potential interest in engaging with Russia differently than other Western countries, particularly given the continued fallout from the Russia-Ukraine conflict. This contrasts with the more adversarial policies traditionally adopted by the US and its allies. However, the situation with Iran is expected to remain tense, as previous administrations, including Trump's first term, have adopted a hardline stance toward the country. Iran's closer ties with Russia and other BRICS members, particularly through initiatives aimed at dollarization, could further strain its relationship with the US. Ultimately, predicting the trajectory of US-BRICS relations under Trump is challenging given the multifaceted dynamics at play. His inauguration next week will likely offer critical insights into his administration's policies and priorities, particularly regarding trade, sanctions, and geopolitical alliances. For now, the future of US-BRICS relations remains murky, and only time will reveal how this evolving relationship unfolds in the months ahead. That's all for today's video. Don't forget to subscribe to our channel and click the notification bell so you'll be notified whenever we upload new content. We've also suggested some videos on the screen that you might find interesting, be sure to check them out. Thank you so much for watching, and we look forward to seeing you in our next video.